Turning now to the U.S. economy. Retail sales came in weaker than expected last month, pointing to a more cautious consumer. Still, some suspect the latest data increases the odds that the Federal Reserve will begin its rate-cutting campaign later in this year. Okay, let's take a deeper dive into those latest retail data numbers. And joining us to discuss this is Carol Spieckerman, a global retail expert and president of Spieckerman Retail. Carol, thanks so much. We certainly appreciate you taking time. Kind of want to get right to it. I mean, consumers have been bombarded for the last several years. Prices spiraling up, interest rates stuck at extremely high levels. So what's behind the weaker than expected growth? Do you think it's any surprise at this point?
Well, inflation maybe isn't as stubborn as sometimes it's reported, but one thing that is consumer perception. So I think there are some lingering sort of a hangover, if you will, with some of the experiences with inflation, much higher inflation not that long ago. Also, a funny thing happens when consumers learn how to save money, which they have over the last few years, through all of the challenges that have been experienced. It's a habit that dies hard. So they tend to continue to hold on to their money a little bit. They know how to save. They've learned that if they wait for deals that retailers will give them. So there are a lot of factors there, but even just a little bit of caution over a longer period of time can add up to a big number. And even though those employment numbers have tended to look pretty good, income growth is lower, interest rates are higher, and that just means less cash in general. On top of that, there are, of course, just psychological factors.
Right.
Again, perception is reality. And we are in a very heated political climate in the U.S. right now, and inflation is a wedge issue. So if it's not completely eradicated, if it isn't a completely rosy story, then it'll tend to get blown out of proportion along the way, and that will also impact consumer confidence. So there's a lot of factors.
Yeah, so break down the sector performance, because we heard in the story leading into you that grocery prices have come down somewhat in the past year.
Yeah, there are some real highlights here. And one thing that really jumped out at me is the performance in apparel and accessories. Now, apparel and accessories are a discretionary category that retailers in general have been struggling with discretionary spending, again, as consumers hold onto their wallets and are a lot more cautious and only spending on necessities. But now we see apparel and accessories with a 1.44% increase month over month and a 6.24% year over year. And that's kind of a big deal because it does speak to consumers maybe not leaning so much into necessities anymore. If it's a longer term trend, that does speak well for discretionary categories of all stripes. We saw some increases in appliances and electronics. So hopefully this marks a turnaround and a signal that consumers are not being quite as cautious.
But one sign is that consumers are very wary right now about the big ticket items. So talk about consumer spending a little bit more and the intersection with economic growth, because one takeaway from today's information is that perhaps consumers are not as immune to higher interest rates as had been thought.
Yes, and and those higher interest rates hit people literally at home. Mortgages and buying homes. People have been used to those lower rates, and that's where it really has a big impact. And and especially too with newer generation shoppers that are very important to retailers. Home buying is very important, and it's a very important life stage. So there's a lot of psychology in there too. And again, perception can be reality all the way around. But we have generally a strong economy, but it is being tempered by some lingering inflation and those high interest rates, and they tend to counteract one another.
Yeah, let's talk more about perception, consumer confidence, and talk about inflation trends out there. And the Fed is watching for lower interest rates. Just a week ago, it was thought that the Fed wouldn't initiate a cut until perhaps December. Now, there's a 23% chance of 3 rate cuts this year. And certainly if interest rates go down, that's going to make consumers feel a little bit better.
Yeah, and what's really exciting about that, I think, is just the timing. Timing is everything. Here we are in July, and if you're talking about 3 rate cuts or even 1 in September, that means that gives it plenty of time to impact the make or break holiday shopping season. This is when retailers make a lot of their money, and in some cases it makes their entire year. So if those rate cuts start happening as early as September, I think that could bode well for the holiday shopping season, and therefore could actually, sort of lift the sales for the entire year. So I would say that the game is far from over.
Yeah, let's talk more about that as we move on throughout the year. The broader consumer trends that you're looking for the rest of the year.
Well, when it comes to consumer confidence, I think what doesn't get talked about enough is that retailers are, they play a role in instilling that confidence. And one trend is more of a retailer trend, but it has impact on consumers in a big way, is that retailers are diversifying into all kinds of new businesses that have nothing to do with products. You look at Walmart, their performance for first quarter was really great. And what really jumped out, though, was yet another double-digit increase in their very highly profitable advertising business. And that means these highly diversified retailers like Walmart can use those profits, if you will, to lower prices on products, and even in razor-thin margin categories like grocery that drive traffic and do a lot for their business overall. So the bottom line is I think retailers have a lot more levers that they can pull to counteract inflation and to counteract consumer concerns. And they're going to start pulling those levers. And I think that means that the raw numbers don't always tell the full story.
Okay, could be an exciting second half of the year. Carol Spieckerman, we can't thank you enough for your insight. Thank you.
My pleasure.